Hello everyone and welcome to ICM's weekly educational webinar. My colleagues Mahesh and Lai would like to thank you for joining. We chose today to talk about more technical indicators to help you choose your right set of indicators and methods in order to reach a better decision making. So the Ichimoku Kinko Hue and the Parabolic SAR are among the most popular indicators used or technical tools used by traders since many years. I'll start by explaining the Ichimoku Kinko Hue and Sai will talk about the Parabolic SAR. So the Ichimoku Kinko Hue also is known as the Ichimoku or Ichimoku Cloud. It was created by a Japanese journalist, Yoshi Hosoda, his name, and it was published back in 1960s. The indicator consists of multiple averages plotted as 5 lines, and they can support a trader in showing support and resistance levels. So when the chart is on the, when you have your Ichimoku Cloud on the platform or on the chart, you can detect support and resistance, and also it will help a trader assess momentum and acknowledge the trend, whether the trend is going up or down, or whether we are trading in a consolidation zone or having sideways trading. So the key 5 lines of the Ichimoku Kinko Hyu or the Ichimoku Cloud. First, we have the conversion line or Tenkan San as called on the MetaTrader for baseline or Kijun Sen, leading span A or Senku span A, leading span B or Senku span B, and lagging span. The leading span A and leading span B, they consist or they make the cloud the famous cloud that traders do prefer. So some of the traders they do omit the other lines and only keep the cloud. We're gonna be explaining the meaning of each line or the usage of each line in a while. So this is the Ichimoku indicator on the Nasdaq 1 hour chart. On the hour time frame here, we can see the lagging span in green. It is called lagging span since it's plotted in the past. Also, we have here the conversion line and the baseline. Also, this is the cloud consisting of leading span A and leading span B. So how can we calculate the lagging span B, baseline, conversion line, leading span, and leading span B, A and B? So automatically they will be drawn, of course, on the MetaTrader 4 platform, but you have to know where did they come from. So first, the conversion line or the Tenkan Sen, it's a 9 period. It's a 9 period average of the past highs. For example, if we take the highest price for the 9 periods, we have their average, and also the average of the latest lows of the lows of the latest 9 periods. So we add these two figures and we divide it by 2. We get the conversion line. Also, the baseline or the Kijun Sen, it's a period 26 by randomly it was chosen. Like we have the 9, 26, and 52. These are the periods used by Hosoda. So we have the 26 period of the 26 average of the highs of the last 26 periods plus also the average of the past 26 lows divided by 2 to get the baseline. A leading span is the addition of the conversion line value and the baseline value over 2. The leading span B is similar to conversion line and baseline in terms of calculations. It's a period 52, also doing the average of the latest highs and latest lows divided by 2. And the lagging span is just the current price, but plotted 26 periods in the past. So it is shifted backward, unlike the span A and B, which are shifted forward depending on the baseline period. So this is for the lagging span. The leading span A and B, they are shifted or they are drawn shifted forward based on the baseline or the Kijun Sen period. So for example, here we have a period of 26. The span A and the span B, they will be drawn 26 periods forward, so they will be shifted forward 26 periods, and also the lagging span will be shifted 26 periods backward. If the baseline here in the calculation we are using period 13, let's say the leading span A and leading span B will be shifted 13 periods to forward, and the lagging span will be drawn 13 periods backward. It's going to be much easier when I show it to you on the MetaTrader 4 platform. But first, let's talk about the interpretation of the Ichimoku cloud. So some of the traders do assess that if the price of a certain instrument is trading above the cloud, it means that we are in an uptrend, and vice versa. When the price is below the cloud, it means that we are in a downtrend. Also, when the price is very far away from a cloud, it could mean that the last swing is overextended and could signal correction or a retracement. Also, traders use the conversion line and baseline crossing similar to the crossing of moving averages. So we are considering that the conversion line and the baseline, they are just simple two moving averages. We take signals based on the crossing of the lower period above the higher the longer period, and vice versa. So if the conversion crosses above the baseline with the price above the cloud, a trader would buy, and vice versa. Meanwhile, the Shenku line or the lagging span is usually used to confirm the trend. If the span is above the historical price, it is another confirmation for the trend. We're gonna go to the MetaTrader 4 platform and discuss it in where it's going to be much easier for you to know what we've been explaining. So here, just to plot the Ichimoku Kinko U, you can go for indicators, and just to drag it on the screen here, we have to choose the periods that we talked about, the Tenkan Sen or the Kenkan Sen. It's the conversion line. So that we used first period 9, the Kijun Sen, which is also the baseline. We are using period 26, the Senko span, we are using 52, and here you can change the colors of the lines. So when you click OK, here you'll have the Ichimoku cloud in front of us. So yes, it's gonna be busy on the chart, so your chart might look messy, but you can omit the lines that you want. So let's start by omitting. First, I'm gonna show you the differences by using different time spans. So how the plotting will change. So since we are using a 26 as period for the Kijun, and this is uh, okay, so this is the fastest. This is the conversion line or the Tenkan Sen, and this is the Kijun Sen or the baseline. This is a period 26, and this is of period 9. So when we change the Kijun Sen, I'm gonna change the Kijun Sen here, which as I said, and this which, as we said here, it interacts with the leading span, and also the plotting of leading span A, and the plotting of leading span B, and plotting of lagging span. So here, if I change this to 13, we're gonna see the green line is gonna be closer to the price, and also the cloud's gonna get closer to the price. So instead of shifting 26, it's gonna be shifting only 13, and which is gonna be almost here in some place here, and also the green line will be shifted 13. Only 13 periods backward from the current price, which is almost here also in the halfway. So if it just like this, you can see here the cloud came back here. It's just 13 periods away from the current price, and also the green line is currently closer, which is also closer to the price, or 13 periods shifted backward from the current price. So here, let's bring back this to 26. Also, there's another change that could happen to the cloud itself, since the lagging span, the leading span A, this one is called the leading span A, and this is the leading span B. But the leading span A is the summation of these two lines over 2. So we have these two values. So we take this value and the other value and divide them by 2, we get the leading span A. So if I change any of these value, and even if I change the Tenkan Sen, I put it as 13, I will only notice a change for the leading span A. So here you can notice a change for the leading span A, and for the conversion line. So if I take it back to 9, you'll notice the red line is moving, and the upper line here, which is almost orange, is also moving. So here it is back to this. If I want to use some of the traders do only prefer to use only the cloud itself, so they omit all these here and then they will be using the cloud. So as long as the price is above the cloud, they would be buying, and if the price is below the cloud, they will be considering selling positions. So here, if you have a look at Nasdaq here, you can see that as the price crossed below the cloud, we've seen here a recovery back to the cloud, and then the market moved down. And also here, when the price moved above the cloud, we've noticed an uptrend. So this is for this is simple assumption for the cloud. So as long as the price is crossing above the cloud, it's a buy signal, and then if it crosses back below the cloud, it is a sell signal. This is very a straightforward assumption. We can draw this we can draw back the Shiku span, which is the lagging span. Here you can see it is similar to the price. So if we just plot the line chart here, it is similar to the green one, but shifted backward 26 periods. So as long as the green line is above the price, it means also that it is another confirmation that the trend is upward. When the green line crosses below the current price, so it's below the chart, it might signal that the trend is moving down. So this is for the lagging span. If I want to remove the lagging span and just use these two, so I'm gonna use red for Tenkan and blue for the Kijun Sen. So some of the traders would believe that if the red line or the shorter period or the conversion line crosses above the baseline and the price is above the cloud, so it's a buy signal. So here they both here, and then an exit could be any trigger crossing maybe for the price below any of these two lines, or a cross down again for the conversion line below the baseline. So this is just a small straightforward interpretation for how to use the Ichimoku cloud or Ichimoku indicator while trading. So that's it. Now we're moving to Sai. He's going to talk about the parabolic SAR.
Hi, thanks, Wael. Hello to everyone. Hope everyone is doing good. Let's move on to the next topic today. Actually, like weekly, we are going on an educational base of all type of technical indicators and other things. Today, we taken as Ichimoku and the parabolic. So, in case of parabolic, the parabolic is also one of the important indicator. Usually, many traders used for, especially for the trading indications and signals. So, it's parabolic, which has been developed by J. Wael and Wilder. Which is one of the easiest indicator to identify the signals while going for a long-term profits, keep your stop loss, or both are things. So basically, the parabolic stop reverse, its name itself says SAR. It's nothing but stop and reverse. So it indicates that you can reverse your position. For example, if you're a long position, which going to give you the stop loss, as well as when there is a reverse happens, you're going to reverse your position on the selling side. So in this case, like parabolic stop and reverse indicate combines price and the time components to generate buy and sell signals. So the parabolic SAR is also effective as a tool to determine where to place the stop loss orders. So most of the traders, smart traders, even you can say smarter, use this tool with a combination of multiple indicator and oscillator to give you to avoid, to filter out the false type of signals over here. So if you say in a parabolic, there are the interpretations are in the two different method where we can identify how exactly the signals has been generated, how to identify where to buy and where to sell. So in the case of parabolic SAR buy signal, the buy when the price close above the upper parabolic SAR. I'm going to show you in a PPT, as well as I'm going to take you to the live demonstrations where you can able to identify how exactly. So when the parabolic SAR changes from the beginning above price to the below price, and then in case of any stocks or any future market or currency trade should be on a stop and a buy to cover this existing short solution when they get reversed. That's what I'm saying. So when there is a reverse happens, when it shows a signal shows on a parabolic, so it's very simple terms. So when you're going through with this graph, you can see the parabolic had been notified in a form of this way, like you can see this. So I notify here this is a recent trading happened on gold with the hourly chart, which has been notified very clearly shown uptrend. We can see the gold was been a bullish for last couple of we can say from the last week it was on one side. Even today it made a new high, recent high of the few weeks. So you can see that how exactly the parabolic has supported to enter to the buy side market and to filter out how exactly the sell side. So this is how when you plotted the parabolic here, the signal will be where I shown here, the signal has been come here. So where it shows that this is a point which has been reversed on the selling side when there is signal upward on a breakout, which shows a bullish stage. So that's what it's been mean to say here. So when case of buy side, the price close above the upper parabolic. When the parabolic changes to be begin above the price to the below price. Same way exactly to the vice versa. When the parabolic SAR sell signal, so the sell signal generated when the price closes below the lower parabolic SAR. That means it cut the break, it break the lower price. At the same time, at the time of the parabolic SAR changes from the beginning below the price to be on the above price. So this is how exactly the reverse happens. So here from this graph, you can see that very neatly there is a a perfect entry has been generated through the parabolic SAR. So where you can see a signal happen on this arrow, which is a buy signal, which has been, and when there is a touch the stop loss of the sell parabolic, it is given a buy indication. So this was the indication which has been notified, it been appeared when this signal has been broken. So which is continuous. So when the signal appears here, it's not mean that you have to buy it immediately. Maybe you can say like that, but if it's anything close above the previous parabolic of the sell side, we can be on a buy side. So you can take a call, you take a buy call on this level, which is when break this level, strong break happens in this level, we can be on continue on the direction. So when this keep moving out, so you can just, so maybe like I'm going to go for the next slide, how to keep the stop loss. I'm going to generally explain about what exactly the indication and how the reverse happens here. Is being continued, and same time when the parabolic points are being keep appearing here. So when there is a reverse happens, so it's going to be a civil sell indication, which is completely a sell side SAR. So here when I said like when this close below this SAR, this could be the signal for you for selling side, but unfortunately there is no a confirmation, a double confirmation not be happened to sell it on the price to be on the seller side. So this can be also can be filtered out by using some multiple type of oscillator, maybe like moving average, which can able to filter out this type of false signals. And over again, we can see a small buy signal happen. Maybe this also can be considered to be a buy, and same time to be a reverse sign or stop loss. Maybe you consider this as a stop loss. So here there's one more signal happened again on sell side, but again it's got failure. It has not been broken that low again further. So again new signal has been appeared. So maybe you continuing from your buy. Maybe you're not been exited here. Maybe waiting for a new signal to reverse your positions, or maybe you're expecting again to reverse your position here. Again it's got failure. Again you got a new entry level to again in the market, so you get an entry back again on the buy side. So continue to see this the flow, the trend, or you can say the market's trend, it's on one direction, which help you to take a decisions on a parabolic SAR. So main thing to understand in parabolic is like the stop. It's a trailing stop. It makes sense to increase your profits. Two factors are main factors here, act as a trailing stop loss, as a time factors. Because as I said, like trailing stop, which is where I maintain like it's a rather than putting in one stop loss below, where the trader enter a long position, or above where the trader enter short positions using a parabolic SAR as a trader guide. So I'm going to show you here. See, very simply, I've taken this same chart, which I've been showing you in the previous slide, which I show you that how exactly the trailing stop loss can be used. So many people have a lot of traders will have a lot of questions like, where to keep my stop, where I want to come out, where I can reverse my positions. So very important, because whenever the price increasing, whenever the price on your positive side or on your positive side, like we want to gradually increase the stop loss. Maybe initial stage, maybe you see an entry here at the buying levels at this point. Maybe you keep a stop loss at this below levels. So you have to travel along with SAR signals, and which definitely going to help you. So this is how exactly when the price moving up, you're going to increase your trailing stop loss from this point to this point. So once you keep increasing, when the stop loss increases, your profit ratio increases. So definitely you will be come out with at least some percentage of profits when you trailing your stop loss. So same way it has been drawn here, and thus as exactly there was a turn happen, maybe you can maybe come out from your profits, you can book your complete profits. Or else some traders are there, maybe they book your profit 50%, or maybe they wait for us 50% to reverse side. Unfortunately there was not happened here, so obviously the trend is continued back again in the upside directions. So which still you are there in the market, maybe you enter again into the market by averaging more positions in the market to continue on the same side of your market of the trend. So as I said, like again, there's a wrong signal happen, the false signal happens here, and which is also can be a trend on both same directions, which is also going to give a stop loss, trailing stop loss keep increasing. So that was a point I was trying to explain here. So majorly like these are two factors which is going to be a point where you're going to take a time factors, as well as you're going to take it as a stop loss. So let's have same example where you're going to take it on a gold. Let's see it on a demonstrations with a live demonstration in the gold. Let me take a 1 hour time frame where I'm going to show you here. It was the same impact, which this was a continued trade was happened from last 3 days, which is a 1 hour chart where I'm going to draw the parabolica. So you can just select and you can drag it to the chart. So there are two factors which is going to be entered. One is like it is a EP, which is extreme price range, as well as one is called like it's an acceleration factor. Those two factors has been built in this. So don't go for higher or don't go for any other parameters. Let's go with a default parameter, which is proven one type of things, which really gives a good result for you when doing on this type of indicator signals. So let's keep it as like which is we can say is a 0.02 and maximum is 0.2, which is a normally they say that it's a extreme price EP, or we can say is acceleration factors, yeah, AF. These are two formulas have been formulated here. For example, for a case of uptrend, which is normally says as a PSR, it's a PSR plus AF plus. This is formulated as inbuilt in inside. So let's keep it as default. And if you go for a change your color, you can fix up, customize your color. For example, if you have a white background of your chart, maybe you can go with a black type of indications, customize. Even you can go to, you can also customize to increase your thickness so that it will be more bright to view, because more important, that's very important, the point, the SAR point indications are very important to decide your trend or signals to enter in the markets. So when I'm showing to you, yes, exactly, this was a entry. You can see here, this was a major entry was being shown here, which is one. Whenever the reverse has been turned and there's a are been turned out, so you can see the break, and this was entry of this buy side, so which was being continually taken to this level. And when there is a reverse happen, when the breakout happened with the sell side of buy side of the parabolic, it has been broke. We can see the sell signals here, so which has not been happened, which has not been confirmed by. But don't enter by closing only. Maybe you can take a double confirmations, like it may enter by closing, it may take your spikes and it may move like this, and unfortunately it may enter in the markets. So for a perfect entry, as well as to get you a proper double confirmation, once you got a first confirmation with the SAR, maybe that particular candles, it may works with even with a bar chart or maybe with candlesticks. Better you'll be have both are the same type of performance, gives your indication for you. But line, I'm not sure, because line does not give the exactly the high and low, it gives only the close, right? So better you take it a bar chart, maybe a candlestick pattern charts, so which will give us a low and low price levels, so which can keep this as your entry level. Maybe for a spread base, we can keep like for example, in case of gold, we may like the spread normally with the 30 to 35 cents or maybe 25 cents, so which maybe you can keep a 50 cents as your breakout level. So once you break this level, we can always enter into the sell side. But unfortunately it's not happened here. But in case like market again back to the buy side, so which you are continuing with here from here, which are such as I told, like which it helps you to increase your stop loss, trail your stop loss, you keep increase your stop loss. And here it may be your exit position has been come. So to the new entry, you may be waiting for the new entry here, but since there is no confirmation, you got an entry back again on the buy side at this level. Maybe you enter here, but there's a market not moved that much to give you enough profit. Maybe you have a stop here, maybe you keep a stop in this level, it not be triggered, and same time it again given a sell indication, the confirmation, but still it's again is not being given double confirmations here. So still you'll be having holding your buy positions in the market. So if you see again, there is a new entry again back. So maybe you are averaging some more positions to take more profits, or maybe you are holding the same position, existing position, which already took it here. And this is how exactly it has been given here. And this is the place which is stop loss will be kept, and you will be trailing the stop loss till this level. So here, maybe you keep a trail stop loss, maybe you trigger out from here, from this, exit your position from this level. So which has been continuous. So now we can see there is a indication which has been still not been confirmed. Maybe we have to show that which has been closed below the SAR point, or maybe above or something. So this is how exactly the SAR indicator helps you, which is can be easily identified on a in a different time frame. Don't go on a smaller time frame because it's keep changing regularly, right? Just a easy the time and as well as the factor, oscillation factor. So don't go on a smaller time durations. Maybe 30 minutes or maybe 1 hour. It works very good. 1 hour works very good. Very good result you will get out from this trade on SAR. Maybe in 4 hours or maybe highest time durations also will be well good work on it. But most commonly go with along with some other multiple type of indicators oscillator to combinations to give you the to avoid the false signals, to to risk our trade to avoid this. So that's how exactly the parabolic all about. So thanks, Wael.
Yeah, thank you, Sai. So if you have any questions, please write them down. Also, just to add what Sai was explaining, if you want to omit or to filter some of your trading, also you can add just a simple moving average with a bigger distance. So when the market is trending, you can omit all these. For example, let's say this is a moving average. Let's say I'm gonna plot moving average 100. So so we are omitting all these the down signals here. So you didn't enter these short signals, you entered just the long signals. So it's just you can have just any other indicator as a filter for to be used with the SAR. And if you have any questions, please write them down so we can answer them. I just want to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell a certain financial instrument.
There is a question asked, small, like, please, what is the condition for SAR buy again? I missed that. All right. We can see if you want to show you in the graph, so that will make sense to understand very easily. So where there are two things when if you're going for what you can say and indications to signals on a SAR. So the first point is like on a buy side, you always look for on a signal whenever the price close above the upper parabolic SAR. That means in the graph you can see there is a parabolic. When the price close above this parabolic, yeah, sorry, the price close above this parabolic, this is an indication for the buy side. The same way, when the parabolic sell side parabolic, when the buy side, which has a sell side indication, which is close below this, which to indicate that is a selling parabolic. So very simple way to understand. One need to practice slowly, then you can gradually increase your speed on a trades.
So if you have any questions, please write them down. Sai, there's a continuation for the
Yes,
question. I
there is
use
a
the
question.
SAR dot
Yes,
under to indicate.
there's a question like I use a SAR dot under to indicate buy for me. I guess I have not been using it right. Sorry, I guess you've been asking that, like your use SAR dot under the indicate under to indicate to buy. So
Yeah, it's
maybe
just very straightforward. It's just very
yes,
straightforward. When the price crosses
yes,
above this down, well, when the SAR points are moving down and the price crosses above it, it means it could signal that there is a change in trend and the market is going up. And when the price is crossing below the rising SAR points, so just like here, it could mean that the price is going to go down. So it's just straightforward. When the price crosses above this falling SAR, these falling SAR dots, it's positive, and when the price goes below these rising SAR dots, it's positive. Some people do use different steps, or so they can have like very distant SAR dots from the market to catch the extremes. It's a different concept, but usually what the SAR is used for is to assess the breakouts. So just similarly to what Sai was explaining, by using the random the default number 002, so you can just here have when the price crosses above the SAR, the falling dots, it's a buy signal, and when the price crosses below the SAR, the rising SAR, usually it is a sell signal. So that's it. How can I use price action and indicators intraday trading? So for price action for intraday trading, if you wanna have trades intraday, you have to choose like a smaller time frame, and usually when using price action on smaller time frame, it's not very valid. So you have to go for it is more recommended to go for higher time frames when trading price action. And for indicators, for example, if you want to use the SAR for intraday trading, you can scalp the SAR breakouts. So for any breakouts on the SAR, any crosses between the price and the SAR can be a trade signal for scalping. So you can scalp a little bit of these trade signals. So also you can add some filters, which you can add some filters which also could have better performance on your strategy. Tend to write NEA for Ichimoku and I like to use both the SAR and Ichimoku. Are these two indicators okay to use together? Well, as we were saying a while ago, that you can use the moving average to filter the SAR. You can, for example, put the Ichimoku Kinko on the platform here, and that you can just remove the lines and just keep the cloud itself. So when the price is above the cloud, it's positive. It's meaning that the trend is up. So you just execute the trades where the price is crossing above the SAR. So for example, this trade here, the price and the Ichimoku alone signal that the trend is up. And here the trade signal came from the crossing between the price and the SAR. So this is the entry, and the Ichimoku was used to confirm the trend. So for example, let's take into consideration this recent move here. We had the positive entry. Here you didn't take your short entry since the trend is up, so you're not selling in an uptrend. Here you took your entry, your long entry. Also here you didn't take your short entry, here you took your long entry, and here you took your long entry. But watch out for one thing when you're doing this. If the price goes very far away from the cloud, it could mean that we are getting in an overbought territory, which could open the way for further corrections, like what similarly to what happened here. We had an elongated move from the cloud, and we witnessed a retracement. Also here, the same. You can use, for example, the RSI indicator along with them to filter whether the market is overbought or not. So this is for clearly for the SAR and how to filter using the Ichimoku Kinko. So any further questions? What is the value for the Ichimoku? So this value for the Ichimoku, as we said, it is the 9. We're using 9, 9, 26, and 52. These are the levels. They are the default values for the Ichimoku Kinko. I would just like to remind you that all the information, analysis, opinions, and news mentioned in this webinar only serve for educational purposes. Okay, perfect. So I believe this is it for today. Sai, do you have any words to say?
Thank you so much.
Thank you everyone for joining. On Monday, we're holding our weekly market update webinar. So stay tuned till then. Thank you.
Thank you all.